Welcome to Simple Mind Space, your go-to podcast for all things personal growth, mindset, and achieving your full potential. Today, we're diving deep into the fascinating world of finance and investing. Don't worry if you're not a Wall Street guru. We'll be breaking down complex concepts into simple, easy-to-understand terms using real-life examples and relatable stories. Imagine this. You're sitting across from a renowned investor, a financial wizard who's agreed to share their secrets to success. That's exactly what we'll be doing today, uncovering the fundamental principles of finance and how you can apply them to build a secure and prosperous future. We'll begin by taking a journey, starting with the humble beginnings of a lemonade stand. Through this relatable example, we'll unravel the mysteries of balance sheets, income statements, and cash flow, all crucial pieces of the financial puzzle. We'll explore the difference between assets and liabilities, revenue and expenses, and how these components paint a clear picture of a business's health and potential. Imagine your lemonade stand flourishing, growing from a single stand to multiple locations. We'll discuss the concepts of scaling a business, raising capital, and the difference between debt and equity financing. We'll learn how smart borrowing can fuel growth while retaining ownership and reaping greater rewards. As our lemonade empire expands, we'll delve into the exciting realm of going public. What does it mean to launch an IPO? How do you determine the value of a business? We'll uncover the factors that influence stock prices, the importance of market research, and the risks and rewards of participating in the stock market. But it's not just about understanding the numbers. We'll also explore the often overlooked psychological aspects of investing. We'll learn how to control our emotions, avoid common pitfalls like herd mentality, and make rational decisions based on sound principles. Remember, investing is a marathon, not a sprint. We'll discuss the power of compounding, how starting early can make a world of difference, and the importance of patience and discipline in the face of market fluctuations. Whether you're just starting your financial journey or looking to enhance your investing knowledge, this episode is packed with valuable insights. We'll equip you with the tools and knowledge to make informed decisions, build a solid financial foundation, and achieve your long-term financial goals. So sit back, relax, and get ready to embark on an enlightening journey into the world of finance and investing. By the end of this episode, you'll have a newfound understanding of the financial landscape and be well on your way to securing a brighter financial future. From lemonade stands to Wall Street, picture this: a sweltering summer day, the sun beating down. You, filled with entrepreneurial spirit, decide to set up a lemonade stand. This simple venture, as we'll discover, is a microcosm of the financial world. First, you need capital, money to get started. You convince a friend to invest, selling them a share of your future profits in exchange for their initial contribution. You've just navigated the world of equity financing. Next, you realize you need a proper stand, not just a makeshift table. To purchase this fixed asset, you take out a small loan from another friend, promising to repay them with interest. Congratulations, you've now ventured into the realm of debt financing. With your stand built and inventory stocked, you're open for business. You carefully track your revenue, the money earned from selling lemonade, and your expenses, the cost of lemons, sugar, cups, and even the small wages you pay your friend to help out. This, in essence, is the heart of an income statement. As days turn into weeks, you analyze your cash flow, the movement of money in and out of you learn to balance reinvesting profits for growth, like buying a bigger stand or expanding to a new location, with rewarding yourself, the entrepreneur, with a share of the profits. Understanding the fundamentals, balance sheets, income statements, and cash flow. Let's dive a little deeper into the financial statements that provide a snapshot of your lemonade stand's performance. The balance sheet is like a photograph of your business's financial health at a specific point in time. It shows what your business owns, assets, and what it owes, liabilities. The difference between the two is your equity, representing the value of your ownership in the business. Think of it like this. Your lemonade stand, the cash in your register, and the unsold lemonade are your assets. The loan you took out for the stand is your liability. Your initial investment, along with any profits you've reinvested, represents your equity. The income statement, on the other hand, is like a video, tracking your business's performance over a period of time. It shows how much money you made, revenue, and how much money you spent, expenses, during that period. In the case of your lemonade stand, your revenue would be the total sales from selling cups of lemonade. Your expenses would include the cost of ingredients, cups, wages, and a portion of the stand's cost, representing its depreciation over time. Finally, the cash flow statement analyzes the movement of cash both in and out of your business during a specific period. It tells you where your cash came from and where it went. For your lemonade stand, your cash flow statement might show cash inflows from lemonade sales and cash outflows for purchasing supplies, paying wages, and repaying your loan. Understanding your cash flow is crucial for managing your business's liquidity and ensuring you have enough cash on hand to cover expenses and invest in future growth. From private enterprise to public offering. As your lemonade stand thrives, attracting customers from far and wide, you realize you're onto something special. You envision a future with lemonade stands dotting the city, each one a testament to your entrepreneurial spirit. But expanding takes capital, more than your current profits can provide. You decide to take your lemonade stand public, offering shares of your company to the public in exchange for investment capital. This is the essence of an initial public offering, or IPO. But first, you need to determine your company's worth. Just like a house appraisal, you need to assess the value of your lemonade empire. You consider your financial statements, your growth trajectory, and compare your business to similar companies in the market. Let's say you determine your lemonade stand company is worth $1 million. You decide to offer 20% of your company to the public, raising $200,000 in the process. This influx of capital fuels your expansion, allowing you to open new locations, hire more employees, and introduce innovative new lemonade flavors. The importance of long-term thinking and value investing. Now that you've had a taste of the financial world, let's shift our focus to personal investing. Just like building a successful lemonade stand, smart investing requires a solid understanding of the fundamentals and a long-term perspective. One of the most effective investment strategies is value investing, championed by legendary investors like Warren Buffett. Value investing focuses on identifying undervalued companies, businesses whose intrinsic value is higher than their current market price. Imagine finding a dollar bill for 50 cents. That's the essence of value investing, uncovering hidden gems in the stock market, companies poised for growth and success. But how do you find these undervalued companies? It requires thorough research, analyzing financial statements, understanding a company's competitive landscape, and assessing its long-term growth potential. Remember, investing is not a get-rich-quick scheme. It's about patiently building wealth over time, riding out market fluctuations, and staying focused on your long-term goals. The power of compounding and the importance of starting early. One of the most remarkable concepts in finance is the power of compounding. Compounding is like a snowball rolling downhill, gathering more snow and momentum as it goes. In investing, compounding refers to the process of earning interest on your initial investment, as well as on any accumulated interest. The longer your money compounds, the more significant your returns. This is why starting early is crucial. The sooner you begin investing, even with small amounts, the more time your money has to grow. Imagine two investors, both aiming to retire at 65. Investor A starts investing $5,000 per year at age 25. Investor B starts investing $10,000 per year at age 35. Assuming both earn a 7% annual return, Investor A will have significantly more money at retirement, even though they invested less overall. The magic of compounding highlights the importance of starting early and remaining invested for the long haul. Even small, consistent contributions can grow into a substantial nest egg over time. Navigating the psychological terrain of investing. While understanding financial concepts is crucial for successful investing, so too is mastering your emotions. The stock market can be a roller coaster ride, with periods of exhilarating highs and gut-wrenching lows. It's during these turbulent times that many investors make irrational decisions driven by fear or greed. When the market plummets, it's tempting to sell everything and cut your losses. Conversely, when the market soars, it's easy to get caught up in the euphoria and make impulsive investments. Successful investors, however, learn to control their emotions, and stick to their investment strategy. They understand that market fluctuations are inevitable and that short-term volatility shouldn't derail their long-term goals. Remember, the stock market is driven by human psychology. Fear and greed can cloud judgment and lead to costly mistakes. By recognizing these psychological biases and developing a disciplined approach, you can navigate the emotional terrain of investing and make rational decisions that serve your best interests. Key takeaways for your financial journey. As we conclude our exploration of finance and investing, here are some key takeaways to guide you on your journey. Start early and be patient. Time is your greatest ally in investing. The sooner you begin, the more time your money has to compound and grow. Be patient, stay the course, and avoid making rash decisions based on short-term market movements. Invest in what you understand. Avoid complex investments or businesses you don't fully comprehend. Stick to companies or industries you're familiar with and can confidently assess their long-term potential. Diversify your investments. Don't put all your eggs in one basket. Spread your investments across different asset classes, industries, and geographies to mitigate risk and enhance potential returns. Control your emotions. The stock market is driven by human emotions. Avoid making impulsive decisions based on fear or greed. Develop a sound investment strategy and stick to it, even during periods of market volatility. Seek professional advice. Don't be afraid to consult with a financial advisor if you're unsure about investing or need help creating a personalized financial plan. A qualified advisor can provide valuable insights and guidance tailored to your specific circumstances. Thank you for joining us. And there you have it, a crash course in finance and investing, all stemming from the humble beginnings of a lemonade stand. We've covered a lot of ground today, from understanding basic financial statements to exploring the complexities of the stock market and the importance of sound investment principles. Remember, investing is a journey, not a destination. It's an ongoing process of learning, adapting, and making informed decisions to secure your financial future. If you enjoyed this episode, don't forget to like, share, and subscribe to Simple Mind Space for more insightful content on personal growth, mindset, and achieving your full potential. We'll be back soon with more thought-provoking discussions and actionable tips to help you live your best life. Until then, keep those minds curious and those ambitions soaring.